This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good afternoon. This is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, you can reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help relate this show to your specific situation. Now, I'm a principal of Falcon Wealth Planning. We are a fee-only registered investment advisory firm. We do manage money as well, but we specialize in tax planning, really anything that involves a dollar sign, folks. Give us a call with questions you may have. We serve people all across the country. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'll be happy to help. We tell you where you are today, how retirement looks like. We go over investments, insurance, estate planning, folks. You name it, anything that involves a dollar sign, we would love to add value to you. But right now, there seems to be a lot of confusion right now with the stock market. There seems to be a lot going on right now with markets going up, markets going down. And really, it derives from the consumer sentiment of what's going on. And that is shown in retail numbers as they've reduced as we had quarter numbers came in recently. The really important part of that is the effect this has on the economy, on everything else. And are we seeing a slowdown? Because yes, we are continuing to talk about recession. We still have international issues as well. And we have people continually to talk about certain issues with international investments. And if that is a good investment, we have people talking about the slowdown in the economy because it's not just retail that's going down. We talk about inflation numbers are continuing to go up. We're seeing that, but not all in sectors has adjusted for inflation. Not all costs have gone up, even though certain sectors' costs have gone up. So their margins are now shrinking. We're looking at a reduced economy from increased costs, increased interest rates, as our feds have now said they're going to increase rates again. Potentially 0.5%, if not 0.75%, in addition to what they previously have. All of this, as we've known historically, says signs of a recession. Yes, these are big things. But you have to kind of take a step back and think to yourself, what does this all mean? You have to see that people have, no matter what economic cycle we're in, they need to eat, they need electricity, and they still are going to go on the internet. It's the newly found form of life. And the economy and the world and people still keep going. We move forward because we are survivors. These are factors that you have to understand because I've seen just extremely intelligent people, myself included, by the way, and of really just overthinking this way too much. Folks, the markets have dropped 20 to 30% plus, depending on the indice. Already, the market is a leading indicator. Everything you are saying, everything that you are reading, everything you are thinking is already baked into the current prices of the market. Inflation isn't a terrible thing for the markets. The thing is everything has to catch up. And that's what provides short-term volatility. You have to be clear of the signs that are out there and to purposely, intentionally reallocate your portfolio accordingly. Some people here are still in bonds, intermediate term bonds, long-term bonds. And listen, there has been studies that show that there are recoveries that could be coming up of that. But currently, as it sits, you have to see that the current markets are unpredictable. Things can turn on a dime depending on the ending of a war. Things could turn on a dime if the consumer sentiment gets better with increased raises, whether it's on your rents, whether it's on Social Security, whether it's on pension, whether it's on payroll. Things are not going to be dire forever. Things aren't even dire right now. There are certain industries that are struggling. Their margins have got cut, but people are survivors and they will find a way. Companies, organizations, CEOs will find a way to be profitable in all industries that are out there. They look for alternatives, they pivot. So to imply that we're going to hit a recession, to imply that things are only going to get worse is crazy, because the market already figured everything out that we're discussing today. They figured it out in advance. Now the recent increased rates environment that the Feds are saying, that's why the markets dropped not too long ago. And it's not going to stop. This will probably continue throughout the rest of this year and maybe even next year, but eventually there's stability. The thing is, what are you doing about it? By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are discussing just the current market situation right now. And there are a lot of variables that are causing this volatile market. But we can look at this as a sale. When you factor that no matter how much has really changed with what's going on with you. Maybe you don't get the appetizer when you go out to eat. Maybe you don't go out to eat. Maybe you eat more in home. Okay, so maybe that affects certain things. Maybe you're not buying those little trinkets on Amazon that you used to buy as much. Or you're not buying the new cool sweater or shirt or socks or shoes on a regular basis that you really never needed anyway. Maybe the costs have increased on your travel to work because of gas prices or shipping costs, depending on what you do. Or the traveling costs have gone up substantially. So the question, yet again, we have to ask ourselves is, what adjustments are people making? And what are you doing? Look at yourself. Are there much changes happening with you? Because that's a key indicator. We are seeing subtle signs of repricing in the stock market. Part of it because it was already overvalued to begin with. But you have to ask yourself yet again, how much are you changing on what you're currently doing? Most people are not. Most people are fearful because of what's happening in the political climate. Most people are unhappy because of what's happening in overseas in Russia. Most people are unhappy about tariffs that are being imposed. And in other countries like China, the tariffs that are being removed. Some are also unhappy of potentially easing up what's going on with China and a potential threat with Taiwan. And them now having Taiwan a very big, almost 50% exposure to the microchip in the world production. So these are all important pieces to everything that's going on. But how does it affect your portfolio? How does it affect what you're doing? What it should be doing is knowing that two things happen. Number one, there is way too much information out there for you to capture. I don't care if you're a professional. I don't care if you're a professor. I don't care if you're just a normal patient investor looking for a good opportunity. There's always data that's coming out every second, and the market reacts instantly. And by the time you analyze the data, new data has come out. That's number one. And then the second part to that is, even if you had it all, you can't time anything that's going on. Look at your situation. Instead of trying to say, well, I don't want to lose 20%. Number one, the market's already down 20 to 30. Could it drop 20 more? I don't know. But the market's already on sale. And if you don't need this money for the next 5, 10, 20 years, and I don't care if you're about to retire in 2 to 5 years, because you're not investing all your money into the stock market. And at the very least, you're going to get a discount where it is today. But if your job is at jeopardy, that's even more of a reason to take a look at your financial situation. That's even more of a reason to analyze how it's currently investing and what changes you should be making. But to be all in or out of the market, or dollar cost in and out of the market on a continuous basis is crazy. You will drive yourself insane because you've probably gotten wrong multiple times before. And if you're lying to yourself saying you got it right, look at your account. Imagine where it would be if you just had a 10% return on the S&P 500, if you just invested in that. Now, I'm not saying to invest in the S&P 500 and put all your money there, because that is also volatile. And that's not very diversified. You did that from 2000 to 2009, that 10-year period, you actually lost 10% in 10 years. You get what I'm saying? So that might not solve all the goals that you're looking to achieve. But to believe that you can continue to do what you're doing, which is frankly nothing, or for those people out there that are smarter than the average bear, to think about it so much where you make mistakes, you really have to look at just putting together an indestructible portfolio. Now, what does that mean? An indestructible portfolio is something that can weather all market climates, good or bad. Any climate that we see, it can handle. I'm not saying you can't lose, that would be a lie. But looking at a globally diversified index portfolio is truly the only logical answer to make sure you keep your sanity of any investment cycle that happens, good or bad. And with that requires international. International has been suppressed for a while. I could argue international is one of the best buys right now. Yet again, please don't go buy it. Talk to a professional, see where that fits in your portfolio. And I'm not talking about individual stocks either. I'm talking about the indices. And there's emerging markets, developed markets. There's large, medium, small developed and emerging markets. There could be potentially 6+ equity holdings in there, and probably even 7 if you want to add real estate in there as well. Not even talking about the fixed income side of it in the portfolio, which a lot of people just ignore. My point is you should reach out to a professional. We do this on a daily basis. We'd love to help. We'd love to give you 1 to 2 hours of our time, 1 to 2 meetings of our time at no cost, folks. We can help people all across the country. We'll help relate the show to your specific situation. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. Folks, we're going to go on a quick break. We're going to come back. We're going to talk more about these markets and what you should be doing to avoid the common pitfalls of certain investors. We'll be back after a few words. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth. You're on every weekend talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. I did want to discuss, we were talking about the markets and so much information and analytics that are out there. They're talking recession, and majority of the time, that by the time we're in the recession, it's identified because there's 2 quarters of negative GDP. We're already outside of the recession. By the time it's identified, we're already on the recovery stage, folks. And this is the biggest issue that we see with people trying to make proper decisions of what to do. And we call it analysis paralysis. They think about so much, they get out of the market because they're fearful and they can't figure out what to do. And they never get back in. And I've talked about this multiple times before. I know things seem dire right now. But do you remember 2020? Remember when everything was shut down? Remember you couldn't even buy toilet paper? That wasn't long ago. That was 2 years ago. And we survived. We came out bigger and better than ever, spending money like no tomorrow, so much that people were paying tens of thousands over sticker price on a car, let alone on a home. You get what I'm saying? So take a step back. Let's go before that. Let's look at 2018. We survived that. Now, it wasn't that big of a deal. That was a slowdown. There was international issues, so on and so forth. Let's take a step back. We had 2016. We had through Brexit and other international issues with China. That's when it really started to begin. Let's take a step back. Let's go crazy now. Let's go back to 2008 with the financial meltdown. You remember that, right? Exactly. Let's take a step back. Remember with Hurricane Katrina and the Iraq War and everything that happened in the dot-com bubble? We didn't do too well there. Let's take a step back. Oh, and then Y2K. Let's not forget about that. Then you had some Russian crisis. Then you had the Asian currency crisis. Then you had the rise of interest rates that happened in the late 1990s. Then you had the savings and loan crisis also in the 90s. Then you had the Iraq invasion into Kuwait, which the market did not like at all. Then you had Black Monday in October of 87. Then you had U.S. inflation rates hit in the 80s at over 13.5%. You had gold hitting record high. How did that go afterwards? You get what I'm saying? Oil prices went up in, what was that, the 70s? The Arab oil embargo. S&P was down 43%. guys, we have seen this movie before. It can happen over and over and over again. And look where we are today. Look where we were, and even when just from January of 2019 to today, we're still up even after the 20 to 30% drops. Yes, inflation is going up. We get that. Prices going up. Well, what do you think is going to happen when you infuse tens of trillions of dollars into the economy? Literally, what do you think is going to happen? You get my point? This is what happens. Prices go up. And companies foresaw this. Unfortunately, poorly ran companies did not adjust and cannot adjust because of contracts they're in or just poorly executed situation. They focused on short-term gains in previous years versus long-term benefits for their company. They're struggling. So certain sectors are having issues. But this is why you do not buy individual stocks. This is why there is no manager, no advisor, no fund out there that has consistently outperformed the index. And when you pull out over 30 plus years, which is God willing, how much time you have left in this world or more, God willing, then the percentage drops to less than 1%. Beat the underlying index. Nobody out there can time the markets or choose individual stocks on a daily basis. So if nobody can consistently do it, why are you doing it? Yeah, you bought Peloton, good job. Nikola's on sale. How is that EV stock doing? Rivian is great. That seemed like everything was going electric. Look at Tesla. Well, for every one Tesla, for every one Amazon, for every one Apple, there's 10 negative investments that try to copycat. You get my drift? So calm down and slow down. You cannot get rich quick. And with that being said, do not look to pull out of the markets. It's not a binary decision where you're all invested or all out. It doesn't work like that. Stay strategic. This is the biggest thing. We don't see a lot of people do that because they don't have a portfolio that can handle market volatility. They don't have a portfolio that can handle market drops. They don't have a strategy of what to do when the markets are going left and right, up and down, or just straight up flat, or in a rising interest rate environment. We haven't really experienced anything like this since the Jimmy Carter years in the 40s, 40 years ago, in the 80s, early 80s at that. This is where you need to do a reanalysis, a recalibration of your situation. And thank God we are extremely busy. We are helping new prospects, hundreds of them, on a monthly basis. And we want you to be one of those that we help out. We have a large team here at Falcon Wealth Planning. We help people all across the country. We recommend give us a call. You have nothing to lose. We'll give you 1 to 2 hours, 1 to 2 meetings of our time at no cost. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'll be happy to help. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are discussing what's going on in the market. And everybody's talking about signs of a recession. We're talking about increased rates happening. We're talking about inflation continuing to hurt companies and to hurt buyers like us, you and me. Things are more expensive now. And we're seeing that. We're seeing prices of homes stabilize. We're seeing prices of cars stabilize. We're seeing the demand curve change with the supply. Yes, supply chain issues continue to be a problem, but with less people buying, demand becomes lower. When demand's lower, prices drop. So yes, you are seeing a slowdown in housing. You are seeing a slowdown in sales. So this is an issue when rising prices are happening. This is why people are forecasting a recession. But what does that mean for you? You shouldn't go sell everything. There are sales happening right now in the stock market. When you look at current sales of what are doing, the current valuations of a company. This next quarter, if you were so worried about fundamentals, take a look at what the fundamentals are this next quarter. That is going to be the true tell, which means this issue we're running into of market drops, of recession periods, it's not long lasting. It isn't. We are handling the money that has been inflown into the economy and people, frankly, just spending it. It doesn't mean that we're in for a long-term crisis or problem. It could be prolonged low markets. It could be that the inflation that's going on could hurt certain sectors. Certain companies may be poorly managed and go out of business. They might have issues refinancing their debt that they had at a bond at 4%, that now they have to refinance it at 6, 7, or 8%, or a bank won't even refinance it. They say, you're not good for it. In a low interest rate environment, companies that weren't producing any revenue, it's very easy for them to get funding. Well, now they're not getting the funding. My point is, don't try to do this alone. I'm shocked that people are like, oh, I got it. Or I go to a cocktail party sometime. What do you do? Oh, I'm a financial planner. Oh, you are? Well, I manage my own money. Oh, good for you. What does that even mean? What's your strategy? What are you doing currently? Oh, I'm doing great right now. I bought the VIX. What do you mean you bought VIX? Like you're betting against our economy, our market? Yeah, okay. Well, how did you do last year or the year before? And they're quiet. They'll always give you the one they got right, and they won't tell you the 5 they got wrong. It's human nature. I don't blame them. And then you take a look at their portfolio. It's like, my God, you've had an annualized return of 4% over the past 3 years when the market did 20. You did 5 times less returns. And guess what? Dalbar does a study that validates this. It's not just Joe Schmo at the cocktail party that's trying to sound like he's the biggest, person in the room. This is for individuals that just truly make mistakes. They're bandwagoners. They're the ones who bought Tesla at 1,000 or 1,100 or even higher. These are the ones that make a decision and sell at the wrong time, like now. This is the time you need to consult with people. You say it's expensive to hire a professional. I say it's really expensive to do it yourself because you'll lose way more than what a professional can charge. And of course, I'm biased. Don't ask me if you should have a financial planner. Of course, we're going to say yes. We wouldn't be in business. Why? Because I know with your money, you're sensitive. If you weren't before, being locked up for 2 years with COVID sure made you more sensitive than you were before. So you are sensitive now, which means when things go poorly, you overreact. You can't even trust yourself like you used to. Get help. What's the problem with getting help? You get help when you go to the dentist. You get help when you go to the doctor. You get help when you want to see an attorney and get in trouble. What's the difference with finances? Isn't it crazy how some of the richest people in the world have professionals helping them out with their finances? Isn't that insane? And we're complaining about money when it's right in front of you. Just talk to the individual to get help. And we are offering a free financial assessment. We are a fee-only, non-commissioned, true fiduciary 100% of the time. We only get paid directly from our clients. We're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost to help relate the show to your situation. Take advantage of it. You have nothing to lose. Before truly, it's too late. Before truly, this ship has sailed. Not the ship of a free assessment, but of the opportunity of capturing a market of where it is right now. That was a fast show. I want to thank you for joining in with us this weekend. Feel free to reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number, 855-963-2526. That's 855-96-FALCON, like the bird. We can help relate this show to your specific situation. We want to thank you for tuning in with us this weekend. We want you to always make sure you can reach out to us with anything that comes up in your financial situation, as our goal is to give you the knowledge you need to increase your wealth. I want to thank you for joining us. I want you to enjoy your weekend. Have a great week, and God bless.